Hey everyone, welcome back to Corporate Decoder, a place where we make sense of the corporate world, one filing at a time. Today we pulled the latest report from Katapult Holdings Incorporated, and let's just say they've been navigating some interesting waters with their lenders. So what is Katapult Holdings Incorporated? They are a company that provides point-of-sale services and financing for consumers. Think about buying furniture or electronics on an installment plan. Katapult is often the engine behind that. Now, the main event in this report is about a material definitive agreement. This sounds super official, and it basically means the company struck a deal that is important enough to tell everyone about. In this case, Katapult Holdings entered into what's called a 7th limited waiver. This is a waiver related to their loan and security agreement. A waiver is like saying, okay, we're not going to penalize you for this specific issue right now. So why did they need a waiver? Well, it seems like on the 31st of December 2025, the company failed to meet a certain requirement in their loan agreement. Specifically, they didn't maintain minimum trailing 3-month net originations. Let's break that down. Originations likely refers to new loans or sales they facilitated. Net means after accounting for any returns or cancellations. And trailing 3-month means the average over the last 3 months. So in simple terms, they did not generate enough new business over the last quarter to satisfy their loan terms. This 7th limited waiver, dated the 15th of January 2026, is a big deal because it permanently waives an existing default. A default is when a borrower can't meet the terms of their loan, and that can lead to some serious consequences from the lenders. By getting a permanent waiver for this specific issue, Katapult has dodged an immediate bullet. This 7th limited waiver is the latest in a series of adjustments to their loan agreement this past year. You see mentions of a first limited waiver, second limited waiver, and so on, all the way up to a second amendment. This pattern of waivers and amendments suggests that Katapult has been consistently facing challenges in meeting its financial obligations as laid out in their original loan agreements. It shows a company that is actively working with its lenders to stay afloat and adjust terms rather than being in outright breach. While this report focuses on a specific legal agreement with their lenders, it is important to remember that the underlying issue is financial performance. The numbers that would really tell us how Katapult is doing are often in the financial statements. Unfortunately, this specific filing, an 8K, is more about reporting current events like this waiver, rather than detailed financial statements like you would find in a 10Q or 10K. However, we do get a glimpse of the company's registration data and stock types. We see common stock and redeemable warrants that trade on the Nasdaq under the ticker KPLT and KPLTolly, respectively. These are signals of public trading and investor involvement, making these behind the scenes adjustments even more critical for shareholders. The fact that they are public means they have to be transparent about these kinds of agreements. Investors need to know if the company is in a stable financial position or if there are potential deal-breaking issues with its lenders. A permanent waiver for a default is generally a positive step in managing immediate risk, but it also points to underlying performance issues that need to be addressed for long-term health. So, what is my take on this? Katapult Holdings appears to be in a situation where they are proactively managing their debt obligations. The company is facing challenges in generating sufficient new business, as indicated by the failure to meet net origination targets. The repeated need for waivers and amendments suggests a potentially strained relationship with lenders and ongoing operational hurdles. While securing a permanent waiver on this specific default is a win for short-term stability, it doesn't magically fix the business performance. The company's ability to generate consistent revenue and meet its contractual obligations is paramount. Investors should be watching closely to see if Katapult can turn its performance around, not just rely on lender concessions. The risk here is that if performance doesn't improve, future waivers might not be granted, or they might come with much harsher terms. Alright, that is our breakdown of Katapult Holdings' latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can overcome these challenges? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord community linked in the description below. Thanks for watching, see you next time.